It is now just a little more than a year past the start of the COVID health crisis, and the one-year returns being reported currently by KiwiSaver schemes really reflect an unusual period in history. Specifically, it captures almost all of the market recovery since the first lockdown, but none of the losses incurred just before. Let's take a closer look. This table shows the one-year returns, and I've ranked the funds from strongest to lowest return. It's pretty clear that leading the results were the Aon KiwiSaver Scheme funds that invested heavily in growth assets. On the other hand, funds that focus more on cash and bonds provided modest results. Now, a bit of caution is warranted when reviewing these results. Bear in mind what I said before. Markets fell heavily just beforehand, and the returns represent only the recovery period. Thus, these shouldn't be viewed as typical market performance or as being repeatable. Instead, we think investors are better to focus on long-term investing and therefore assessing success based upon long-term returns. And here are the 5-year returns, which capture downturns as well as the good times. Overall, these continue to support the idea that holding growth assets provides for stronger long-term returns. The recovery in market returns has been faster and stronger than most experts predicted. This is in large part thanks to the huge scale of stimulus provided by governments and the speed at which vaccines were developed and rolled out. These positive themes continued mostly in the first part of 2021, and despite some hiccups, share markets continued up as investors focused on the very successful rollouts of vaccines, particularly in the US, but also in the UK. And there's also been further rounds of stimulus. Notable was an additional US dollar 1.9 trillion package announced by Joe Biden, putting the US on track to spend the equivalent of a quarter of its GDP on COVID-19 support. And while most cash rates remain unchanged, the yields for long maturity bonds moved sharply higher during the quarter. Just like the Reserve Bank of New Zealand, many other reserve banks are pursuing low interest rate policies. Now, during the quarter, expectations increased that the US Federal Reserve may increase interest rates earlier than previously expected, and this caused long-term yields around the world to rise, including for New Zealand bonds. This view stemmed from the observation that the US economic recovery has been stronger than forecast. It seems likely that a significant portion of the population in several developed economies should be vaccinated by the end of the second half of 2021, and so it's right to focus on life past the virus. In addition, the huge stimulus packages have delivered a really accommodative environment for global economic growth. And although this support remains necessary, it may result in economies growing too fast, leading to inflation and perhaps interest rate increases. Given this, we think there's two key risks that investors should monitor. Firstly, we've already mentioned that Reserve Bank resolve to keep interest rates low might waver. New Zealand might be one of the first to adjust, as since March, the government has required the Reserve Bank to consider house prices when making decisions. Reducing this risk somewhat is some tax changes that were also announced in March, which can cool the housing market. And while policy tightening seems some way off for most countries, economic growth has been stronger than expected, and there is some evidence of inflation to consider, including many commodity prices moving to new highs. And then there is the risk of slow or inefficient vaccine rollout, extending existing lockdowns or lockouts from international travel. And while this risk seems acute for continental Europe and emerging market economies, recent pauses in the trans-Tasman travel bubble are a reminder that New Zealand's economy can suffer too. Despite these risks, we believe the next phase can favour growth assets, and moderate yet volatile returns are possible. So that's our brief summary of the events of the past year. If you haven't looked at your Aon KiwiSaver Scheme investments recently, then maybe it's time to do so. Check out your account balance online or look at the investment returns which are on our website.